Good afternoon, everybody. It's 12 January 2021, and based on client questions today, I want to discuss the future of your investments and how Spectrum's recent market projections have worked out for you. Our firm believes your investment future is very bright. We're forecasting a 20 to 30% increase in our clients' portfolios this year. Now, in the first 11 days of the month of January, our clients' returns are averaging 3.2% net of all costs. That's nearly 1/3 of a normal entire year's total return historically in the equity market. And we believe it indicates the underlying strength in the economy and our nation's equity markets. In response to Biden's election, we've also been making some reallocations and adjustments in your portfolio. For example, on Tuesday of last week, we sold our remaining Core Civic holding. We previously sold Core Civic at the end of last year in client taxable accounts to provide our clients a tax loss that should fully offset their 2020 capital gains tax liability. In a Biden presidency, we simply don't believe private prisons will remain promising in outlook. We have stated in many of our posts and Facebook Live sessions that our portfolio models are actually structured with a majority of investment holdings that are likely to do better under Biden administration than a Trump presidency. Now, here's something that we said on October 28th last year about our portfolio investment returns under a Biden administration. Our portfolio actually has approximately 50% of its elements that are likely to appreciate more due to a variety of factors in a Biden administration than in a Trump administration. So you can see that that was a correct statement, and we're actually outperforming the S&P 500 by a large margin year to date. Since Election Day on November 3rd, 2020, through January 7th, 2021, including the loss we took on Core Civic, our clients' accounts have appreciated by 33.61% compared to the S&P 500 index return of only 14.91%, more than doubling the indice average. You see these returns, again, going from Election Day through the 7th. The chart on the right shows you the growth of $100,000 based on those achieved rates of return. We also stated that our portfolios are likely to do better under a Biden presidency, partially because our single most overweighted investment sector is actually banking. Here's what we said on October 28, 2020 in our Do Not Fear, The Road Ahead is Bright video about the banking sector. Due to the likely higher government spending of a Biden administration, long-term interest rates would go up much faster, increasing our bank's profits and their stock prices. So let's take a look at how those bank projections worked out for you. You see in this chart the three banks that we own: Citigroup, Capital One, and Bank of America. We measure them against the green line, which is the S&P 500 change since the election on November 3rd. You'll note that the returns on all three banks are multiples of the S&P 500 return. Folks, this is a long way from being over. Banks are still inherently undervalued by a factor at this point that I would say is 30 to 40%. Since our market low call on March 24th, 2020, a call we actually made on April 2nd of last year, our client accounts have appreciated by a net return, net of cost, of 86.14%. That compares to the S&P 500 index at 69.82%. Folks, in closing, we are not fearful for the markets, for the economy, or for your investment portfolios. We believe our total investment returns this coming year will be greater than normal for SFA client portfolios. Our firm projects above average gross domestic product growth, continued job growth, and export expansion. And yes, I understand there's going to be a lot happening in this environment politically, but there are limits to what can be done to unseat one of the greatest growth economies in the history of our country. Thank you so much. Please give us a call if you have any questions, and God bless you, and God bless the United States of America.